Hi and welcome back to another episode of The Mortgage Musketeer, where today we're going to be talking about 5 ways to screw up your loan. Alright, so pay attention. These are the things that blindside loan officers after we've done a pre-qual or pre-approval, and it's mainly due because buyers just don't understand the lending process. So pay attention to these items and it will help you get to the closing table. First of all, do not make large deposits. Large deposits are bad. They can kill your loan. And here's the thing, is people think, well, it's my money, it's American money, I can deposit anything I want in the bank. No, you cannot. So you have to understand that at the end of this process, there's a massive amount of money that is wired. That massive amount of money is monitored by the Fed. So when the funds are released, they're wired. And because they're wired, they go through the Fed. And the Fed approves them, saying it's not wire fraud or money laundering. Therefore, it is governed by the federal government. And what really impacts us is the Patriot Act for money laundering and terrorism. That's how it all comes together. So if you deposit a large amount of cash into your account that we cannot source, they'll back it out, which means you can't use it. Which means you drop $5,000 in the bank and we can't source it because it was cash. That means even if you have $10,000 in the bank, they're only going to count $5,000 of it. That's a problem. So do not deposit cash in the bank. Talk to your loan officer, let them know where all of your money is coming from, because this is critical. The hardest part about a loan is assets, and it's the biggest thing that buyers screw up all the time, or they move their money all over the place. And here's a video on that from the very beginning. And remember, cash is the devil. Number 2, do not change your jobs or become self-employed. Don't think that, hey, I've been doing this job for 15 years, I can do it better on my own. I'm doing a loan, this is a great time to change jobs. No, that is the worst possible moment in your life to change your job. You're qualified where you're at with the job that you have. Close the loan before you make any amazing life changes. Okay, otherwise your loan is dead, because you have to have 2 years of self-employed history in order to count that. And on that same note, number 3, do not take time off. Okay? In addition to the assets and the bank statements and everything else that we have to get, we also have to get 30 days of pay stubs and your past 2 years of W-2s. Why? Because we are looking at your income. Salary employees are pretty simple because it's a salary. It's straightforward. This is my yearly salary. This is what I get a month. Hourly employees, on the other hand, they will actually look at your year-to-date income, which is another reason why when you send us your pay stubs and you send us some digital printout or screenshot or some other non-actual pay stub document, it doesn't work, is because they are actually going to look at your year-to-date and see how many hours have you worked. Yes, it's just math. You figure out your hourly wage, you figure out how much you've made, you back out, and it averages out to how many hours you work a week or a month. Alright, so if you know you're going to be buying a house, don't take time off, don't get lazy, don't leave work early. You want to maximize your income. Alright, so stop, and I know hourly, a lot of times we're like, ooh, hey, I got off early, woo! Well, you just worked less hours. You got paid less, you qualify for less. Alright, so if you know you're going to be buying a home, or if you're in the home buying process, or if you're starting to think about it, work your 40 hours at least every week. Okay? Stay consistent. Alright, do not, and this is number 4, do not get any loans after you're pre-qualified or pre-approved. Don't let anybody pull your credit, okay? Because there's fraud guard, and they will see when you have had your credit pulled, all right? And then we'll have to explain it. And oftentimes, they do that, it's called a soft pull at the end, so everything is going great with your loan. We're just about clear to close, and then we get blindsided because you had a credit inquiry. And then we have to stop the process, reach out to you and say, hey, you had a credit inquiry, what is this? Please tell me you didn't just go buy a car. Please tell me you just didn't buy furniture. Please tell me you just didn't buy appliances. You need to understand this more than anything else when it comes to the process. You're pre-approved, you've got a contract, you're in underwriting. You do not own that house, period. Do not buy anything for that house on credit. Because if you do, you probably will not be owning that house. Because it will pop on fraud guard, they'll see what it is, and all of a sudden now we've got a new loan that we have to add into your debt to income ratio, and if you were close to begin with, your loan is dead. Alright? This is serious. After you close, go crazy. Don't care what you do after you close. But up until the point at which you close, you are not allowed to go have anybody pull your credit or do any loans, even if it's a holiday special. I get that all the time. Oh, we have a Memorial Day special. We have a Labor Day special. We have a Thanksgiving Day special. We have, oh my gosh, the Black Friday. Please no. If you are in underwriting during these periods or any other holiday special for financing and you see great deals on appliances, sorry. Timing-wise, we missed it. Do not let anybody pull your credit or get any loans. On that note, don't co-sign for anybody because that counts too. If you co-sign for a debt, their debt is now your debt and there's no way out. Period. So, co-signing the loan means that you are going to take responsibility for it in the event that the other person doesn't pay. Which means if they don't pay, your credit is screwed and it adds to your debt to income ratio, even if the other person is making the payment. Doesn't matter, it's still your debt. Don't co-sign for anybody. All right. And number 5, do not spend the money in your bank accounts that your loan officer has already verified. That's your down payment. That's the money for your closing costs and prepaids. That's your total amount that you're going to use to close the home. Don't spend it. And this ties all the way back into number 1. Don't make large deposits. So what I get, and I just had this happen, and it's so frustrating. Somebody has more than enough money in the bank to close the deal at pre-approval. Then they go out shopping. Takes them about a month and a half to find a home, which is fine. They find a home, they're excited. I'm like, great, they've got like a time and a half amount of money in there. There's no issues, you're pre-approved. They get the house. While we're preparing everything to submit to underwriting, we need to get updated bank statements. Then we discover, they spent all their money, but no worries, they just replenished it because it's cash and now it's in the bank. Therefore, it's verified. No! That large cash deposit has to be sourced. So now, if you don't have that ability to source it, if it was cash, you don't have that money anymore. Okay? It's that simple because you're going to back it out. So even if you had 10 grand, you spent 6, you took it from your safe, put it right back in, yeah, I still got 10 grand. No, you do not. Now you have 4 grand, even though it says 10 grand. Okay? Cash is the devil. Don't spend the money in your account. If you need to buy something, buy it with the cash. Don't take it from the bank. Buy it with the cash. Don't put the cash in the bank and then use that to write a check. No, because that's still a large deposit. If you cannot pay for it with cash, don't buy it. Okay? Period. If you avoid those 5 things, you'll make your loan officer's life so much easier and the loan will go pretty smooth. Okay? So keep those things in mind. I know this is tough love and I'm being very direct, but good night. People just don't know, and I'm pulling the curtain away and revealing how this stuff works, okay? It's education, it's understanding. There's no rocket science to buying a house. It's simply regulations and understanding how to go through the process. So now you're a little bit smarter. All right, hopefully this helps. If you have any questions, leave the comments below. I do answer them. And until next time, it's all for one and one for all.